to discuss. Well, Joanne, let's pick up on that point. I mean, Blackwell is sort of the future here. What are your expectations?
Yeah, good morning, Courtney. There's clearly a lot of potential in Blackwell, but as it was just commented on, Hopper isn't done. And it's unusual for a chip maker to clearly announce a better, more capable chip coming up and not see sales decline for the previous chip. But that's a signal of just how strong demand is. To see Hopper actually face growing quarter-over-quarter sales, even as the Blackwell one ramps, is very unusual in the chip world. And it does tell you something about the duration of demand. They have a very long waiting list, as was described. So the company has unusual visibility, and that's a nice place to be. So longer term, we're liking NVIDIA. We've owned it for a long time for clients, and we continue to own it because of its pretty vast growth potential from here.
As Christina was saying, it's kind of hard to find anyone that isn't interested in owning NVIDIA. But if we're trying to look at potentially some weaker points, are you worried at all about the gross margin challenges that may be ahead for Blackwell?
Yeah, I mean, there's always something to worry about with any company you own, no matter how good. And so obviously that's why we offer diversified portfolios when we build them for our clients. But in this case, the risks are a little different than usual, right? Oftentimes you worry about execution risks. We're just not seeing those kind of execution problems, even with those rumors about Blackwell problems. It turns out it's a server and rack design issue that the builders can handle. Another risk is competition, always. But what we're seeing is NVIDIA has such a strong lead that it's likely to dominate the market for years to come, even as AMD brings chips to market, even as internal development from Google and Broadcom continue to push the TPU forward. And we're seeing other areas of development. But the market is so big, we don't think that's going to erode prices, for example. On the gross margin front, as you mentioned, the company outlined there's going to be a little bit of a hiccup in gross margin. But the company has about a 75% gross margin, which is pretty unusual for a logic chip maker. And the reason they're able to achieve such highs is because of the software that comes bundled with it. But as they ramp Blackwell, there's going to be increased expenses, and that's going to constrain a little bit, maybe for a couple of quarters, their gross margin. But they have pretty good visibility, so that should even work out pretty well.
NVIDIA is without a doubt the benefactor of all this expenditure. The business provides the GPUs that are driving the AI revolution and is probably going to ride that wave to join the $10 trillion club as a founding member. NVIDIA has several additional growth factors than its AI expertise, though, which might help the stock reach new heights. In 1999, NVIDIA invented the GPU to produce realistic visuals for video games. Parallel processing, or the capacity to carry out numerous mathematical computations at once, made this feasible. NVIDIA transformed an industry by dividing a processing task into smaller, easier-to-manage pieces. But it was only the beginning. The chipmaker quickly changed course, utilizing the same technology for a variety of new purposes and making significant strides in the IT industry. These days, NVIDIA GPUs are used extensively in cloud computing, data centers, machine learning, autonomous driving, and most recently, generative artificial intelligence. NVIDIA has had a 2,300% increase in revenue and an 8,460% increase in net income during the last 10 years. Even though it has been a wild journey, the company's continuously solid financial results have caused its stock price to rise impressively, rising 29,050%. NVIDIA recorded record sales of $35 billion in the third quarter of its fiscal 2025, up 17% sequentially and 94% year over year. As a result, adjusted profits per share, EPS, increased by 103% to $0.81. The data center segment, which comprises chips used in cloud computing, data centers, and artificial intelligence, drove the results. Due to the unquenchable demand for AI, the segment's revenue increased 112% to $30.8 billion. The road ahead is lengthy due to the demand. According to Goldman Sachs research analysts, the AI market may reach $7 trillion by 2030. Additionally, companies are more inclined to invest in this innovative technology as a result of the improved economy, which will help NVIDIA. NVIDIA's greatest opportunity is undoubtedly the expanding use of AI, but there are other opportunities as well. Gaming had long been NVIDIA's main growth sector prior to the development of artificial intelligence. That changed in the last several years as AI overtook it as the dominant technology. With the economy improving, the segment, which still accounts for 10% of NVIDIA's revenue, may see substantial growth. Due to inflation, gamers have to settle for using their current graphics cards while waiting for better circumstances. Many industry experts now think that, particularly as we approach the holiday season, pent-up demand is likely to be released, resulting in a long-awaited upgrade cycle. John Petty Research reports that NVIDIA accounted for 88% of the discrete desktop GPU market in the second quarter. Although the third quarter industry figures are not yet out, NVIDIA's dominance is not anticipated to alter. So, what implications does this have for NVIDIA stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
I guess, Joanne, if you were trying to construct a negative scenario, would it come down to the idea that the end-use applications for AI are not what people think, and they're not really making as much progress in the enterprise or with consumers, and therefore the hyperscalers are going to be under pressure to slow their spend? I know it sounds unlikely, but I suppose it's possible.
Yeah, no, David, that's exactly right. And that's the fear, right? At some point, is there a digestion period? At some point, do the hyperscalers say, okay, we have enough for now. We're going to pause. We're going to see if we can make money with these training models, et cetera. And that is the big fear. And I think that's part of what the bear thesis is for the company. When you look at, though, the tail of demand for these chips, you see it beyond the hyperscalers, as the company has said. They talk about sovereigns. But even beyond that, companies in the financial industry are starting to think about ways to deploy AI, but more importantly, to do it on their private data, to potentially bring in AI training on their own data, whether it's in emails or client data, not client data, but emails and process data to improve the back office, to deliver greater cost savings. So I think there's a long tail in enterprise, but that could take longer to turn out. So to your point, David, yeah, that's the biggest risk. Is there a pause at some point? Given their visibility, we don't see it coming up anytime soon.
Yeah, well, absolutely. Shares have been a little bit all over the place this morning for NVIDIA. Down now a little bit, perhaps an opportunity for some that might want to get in. Joanne, thank you very much for joining us here today. Joanne Feeney.
Additionally, Mordor Intelligence projects that the demand for video game processors will increase at a compound annual growth rate, CAGR, of 34% over the next 5 years, from $3.6 billion in 2024 to $15.7 billion by 2029. Being the top supplier of state-of-the-art gaming processors, NVIDIA is probably going to profit from these non-gaming tailwinds. Not to be overlooked is the data center market, which was already expanding rapidly as a result of the digital revolution. Data centers are becoming more and more necessary to meet the growing demand for cloud computing. Analyst Angelo Zeno of CFRA Research estimates that NVIDIA holds a 95% market share in the data center GPU space. Additionally, prescient and strategic intelligence industry research projects that the data center industry will more than double, growing at a compound annual growth rate of 10% from $302 billion in 2024 to $622 billion by 2030. Machine learning is one of the well-known areas of AI that are fueled by NVIDIA's processors, even if generative AI is currently grabbing all the attention. According to New Street Research, the business controls an estimated 95% of that market. NVIDIA has a lot more low-hanging fruit to pick thanks to its dominance and the prospects for further growth in each of these sectors. With a current market valuation of about $3.58 trillion, NVIDIA will require 179% stock price increases to reach $10 trillion in value. In fiscal 2025, which concludes in January, NVIDIA is expected to earn revenue of around $126 billion, according to Wall Street, which would translate into a price-to-sales, P/S, ratio of almost 28 for the company's stock. To support a $10 trillion market cap, Nvidia would need to increase its revenue to about $352 billion a year, assuming its P/S stays the same. Over the next 5 years, Wall Street now projects that Nvidia's revenue will expand by 47% annually. The corporation may reach a $10 trillion market valuation as early as 2028 if it can meet that criterion. That may sound audacious, but I'm not alone in thinking it will happen eventually. By 2030, Nvidia's market capitalization is expected to exceed $10 trillion, according to Beth Kindig, CEO and senior tech analyst for the I/O Fund. Because of its quick product roadmap, the CUDA, Compute Unified Device Architecture, software platform's impenetrable moat, and its status as an AI systems company that offers components far beyond GPUs, such as networking and software platforms, we predict that Nvidia will reach a $10 trillion market cap by 2030 or earlier. I believe Kindig has done her research, especially considering the several potential avenues that lie ahead and the quick and growing acceptance of AI. Nevertheless, Nvidia is not for the timid. The stock fell 27% in just 6 weeks from June to July of last year because to rumors that the company's AI-focused Blackwell chips might not be released on time. Since then, cooler heads have won out, and the stock has increased to unprecedented levels. However, the lesson is still valid. Nvidia is expected by Wall Street to produce an EPS of $4.20 in fiscal 2026, which starts in late January. As of this writing, that equates to almost 33 times anticipated earnings. For a company that supplies the gold standard processors required to power one of the most significant technological breakthroughs in a generation, I believe it is an attractive price to pay. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
I mean, talk about a train that just, you can't stop. NVIDIA continues its AI data center domination with another blowout quarter, nearly doubling earnings on the quarter versus the same quarter last year. Data center business was up 17% sequentially. Now it's over a $30 billion per quarter business. It's up 112% in data center versus the same period last year. And it's driven by sales of NVIDIA's Hopper and Blackwell GPU architectures. That's where the fuel is. Data center build out with hyperscalers like Microsoft Azure, AWS, Oracle, Google Cloud. That's going to continue for the next 18 to 24 months, I believe, as demand for AI compute in the data center is currently outstripping capacity. So I don't see any signs of this NVIDIA train slowing anytime soon.
Very interesting. And I had a guest yesterday who said $800 by the year 2030. Very positive because of all the different things that NVIDIA brings that all the other chip makers don't have the ecosystem that NVIDIA has. And that's something you've focused on, right?
Yeah, actually, kind of the unsung hero in a lot of these high-tech companies like NVIDIA is their software engineering prowess. And that's really an enablement story to optimize and help developers, get up to speed quickly with their platforms. The company is releasing hundreds of what it calls NIMs, or NVIDIA Inference Microservices for AI. These are little AI boxes, if you will, that are optimized on NVIDIA hardware and allow developers to take advantage of industry platform AI models, but optimized for NVIDIA hardware, and getting them up to speed quickly on that hardware so that they can, go work their magic with it. And so really that is one of NVIDIA's core strengths, in addition to its obvious silicon prowess as well.
Over the past 5 years, NVIDIA has dazzled investors with its incredible rate of innovation, introducing new architectures and graphics processing units, GPUs, to maintain its leadership in the rapidly expanding field of artificial intelligence, AI. In 2020, The Ampere architecture was introduced. Then in 2022, Hopper. Quarter after quarter, this has enabled the IT giant to achieve triple-digit increase in data center revenue. NVIDIA launched new GPUs in between the design introductions. The new H200, for instance, improved upon the H100. Jensen Huang, the CEO, promised to improve processors annually, and the tech giant should stay ahead of the curve. The Blackwell architecture, on the other hand, is the one launch that everyone has been anticipating and discussing, and it will happen today. In the current quarter, the corporation anticipates increasing production. Blackwell's game-changing features, 6 revolutionary technologies, including the most potent GPU to date, high-speed networking, and preventative maintenance capabilities, have everyone buzzing. Here are 3 things you should know about this fascinating new source of NVIDIA money. Given the upcoming significant launch, some investors might be concerned about supply chain concerns. In order to obtain specific materials or services, such as memory components from SK Hynix and Micron Technology, NVIDIA does not manufacture all of its products internally. Additionally, it depends on partners to sell its GPUs to consumers by integrating them into its servers and other goods. This is where businesses like Dell and Supermicro Computer, which manufacture equipment, come in. Our supply chain appears to involve almost every company in the world. Huang stated on the third quarter results call this week. Even though NVIDIA must be very organized, this is a great thing because it enables the firm to increase output to a high level. NVIDIA's Blackwell shipments have increased from nothing last quarter to billions this quarter, which was not possible with a small player base. A strong supply chain also guarantees that NVIDIA can rely on another supplier to cover for them in the event of an issue. This lowers the possibility of delivery delays, which NVIDIA undoubtedly wants to prevent given the strong demand for the new Blackwell platform. The precise percentage of income generated by each customer is not disclosed by NVIDIA. However, based on Huang's and these clients' statements, we know that Blackwell's demand is being driven by today's largest 8 companies. According to their social media posts, Blackwell systems have been delivered to Microsoft, Oracle, and OpenAI. Alphabet stated it would be among the first to supply Blackwell GPUs at scale, while customer Meta Platforms mentioned increasing its investment in AI infrastructure spending in recent earnings reports, a move that signals more spending on NVIDIA's products. In addition, Larry Ellison, a co-founder of Oracle, recently stated that he and Tesla CEO Elon Musk begged Huang of NVIDIA for additional GPUs. These digital behemoths have the capital to keep making significant investments in AI. They are likely to keep coming back to the business that offers the best products and services since they have a strong desire to succeed in this AI revolution. NVIDIA is that. Investors should feel more confident about Blackwell's potential to emerge as NVIDIA's next significant growth engine as a result. NVIDIA recorded a gross margin of over 74% in the third quarter, which is an astoundingly high level of sales profitability. Quarter after quarter, the IT behemoth has kept its levels above 70%. As the Blackwell rollout progresses, NVIDIA now predicts a minor decline in gross margin to the low 70% level. Given the work that NVIDIA is currently doing and will be doing in the near future, this is not concerning and is actually quite normal. The business has a lot of moving components, such as 7 distinct processors, numerous Blackwell configurations, a wide range of networking options, and a diverse clientele that includes cloud service providers and equipment manufacturers. Although this is a short-term issue, NVIDIA will incur significant costs in handling all of this in the early days of the launch. NVIDIA estimates that the gross margin will stabilize at a level of about 70% after Blackwell has reached full production, which might happen in the second half of next year. With that kind of sales profit and consistent revenue increase each quarter, NVIDIA and its investors may emerge as significant beneficiaries of this AI revolution. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community.